Hello and welcome to the crypto market updates. Starting with BTC. Today we saw BTC was doing the sideways price action between $22,400 to $22,472. That is a very small range for Bitcoin price action to hover around, and we are still seeing that BTC is trying hard to break above this resistance. If you are following the market updates daily, then you must be knowing that the strong resistance zone for Bitcoin price action to proceed to $25,000 is between the range of 23,500 to 23,700. If BTC closes a 4-hour candle or even daily candle above this resistance, then we can expect further move upside. But right now, Bitcoin and cryptocurrency market is overall appearing to be very weak, especially Bitcoin, as we are seeing drastic fall in Bitcoin dominance. That is showing that the crypto market is not going to have rally anytime soon as compared to the altcoin market. If you are seeing that the Bitcoin dominance chart, we are seeing that Bitcoin dominance has been going down for quite a while, and it break down the resistance for the for from 41.89 percentage, and right now it is at 41.44%. That is the lowest in this bear market we have seen for the Bitcoin dominance, and this is because we have the news of Ethereum merge coming up in as soon as September, and if it successfully is deployed, then we can see further boom in the altcoin market, especially in Ethereum. If we see, Ethereum briefly reclaimed the $1,700 level today, and right now we are still retracing from exactly the resistance which I have drawn. If you are following the market updates, this is the resistance I have drawn from quite a while, and this is really difficult for Ethereum to break above. The resistance point is between $1,729 to $1,900. If Ethereum breaks above this resistance, we can expect further move to $2,200. That would be similar to Bitcoin moving up $24,000 to $25,000 or even $28,000. But right now, looking at Bitcoin dominance doesn't signal that is going to happen anytime soon. And Bitcoin dominance falling right now rapidly is showing that the Bitcoin strength in the market or even overall crypto market strength is not really good. If we see Ethereum dominance however is going up, and would this mean that the flipping between the Bitcoin and Ethereum can happen anytime soon? For that, we'll be seeing other statistics and the overall data, which will be able to confirm us that whether this is going to happen anytime soon or not. By looking at the Ethereum market cap and the BTC market cap, right now BTC market cap is more than twice of that of Ethereum. And if we see over the years, getting twice of the market cap is not that big of a deal. But right now, if we see the institutional investors getting into the cryptocurrency market, then overall the first cryptocurrency they are interested in is Bitcoin. And obviously, we have seen, yes, just yesterday we saw that the BlackRock has started to offer cryptocurrency services, attracting, which is usually attractive to the overall institutional investors. Why? Because institutional investors are big investors, they don't usually prefer to hold their own bitcoins or even their wallets. They prefer to have a custodian to do that for them, and that they just represent the assets or liabilities they hold in their balance sheet. But right now we are seeing BlackRock announcing the cryptocurrency market services to the institutional investors is overall bullish for crypto market. But still we are seeing Bitcoin is very weak right now, and this is signaling that we may not be able to see any nice rally until and unless Bitcoin breaks above this $23,500. Therefore, I'm out of leverage trading right now. And if you move on towards the statistics as well as the stock market, right now Nasdaq has started from Nasdaq is closed yesterday at around 324 points, but right now today Nasdaq started from 319 points. That is, let's see how much percentage drop we saw in the Nasdaq today at the opening. We saw 1.57% at the Nasdaq in the opening today, and we saw Nasdaq going all the way back up, but right now it is retracing back again. Moving on towards S&P 500, S&P 500 is also doing a similar pattern, and this is because I feel that dollar currency index is trying to break above the resistance and support trend lines I have drawn. Usually this was acting as support. We saw first dollar currency index bounce from this trend line and then broke below this trend line on 1st of August, but right now it has tested this trend line multiple times, and when a resistance is tested multiple times it becomes weaker. So right now it has broken the trend line. If it closes on the daily time frame, or even if we see the 4-hourly time frame, if a single 4-hourly time frame candle closes above it, we can expect dollar currency index to be bullish. However, if we see on the previous data from 3rd of August, we saw that 4-hour candle closed above this trend line, but still the market didn't reacted to it and it rebounds back again. So therefore I'm relying on the daily time frame right now. If we close above the daily time frame above this trend line, then we can expect furthermore upside for the dollar currency index, and the dollar currency index could reach its high of 111 from the Fibonacci retracement level. So that is why I expect markets not to make any high anytime soon if the situation of BTC continues and it is still showing weakness, if it doesn't break this resistance right now. So that is all for the cryptocurrency market scenario. Overall for August, I expected that the BTC would be able to break 24,000 to 23,000 resistance and move towards the $25,000 or even $28,000 level, as there is very small resistance between the $25,000 to $28,000 level. So that would have been a piece of cake for Bitcoin if broken the candle above, or even close the daily candle above $25,000 level. But right now it doesn't seem to happen much likely. However, we are most likely to be surprised by the market if dollar currency index starts to crash down. Also on 10th of August, we are expecting the CPI data to come out. Last time we saw the CPI data of 9.1. I just now hosted a Twitter session for it as well to explain if the CPI data comes out to be 8.8, we are still in the bearish scenario. This is because that the market is still expecting the Fed to be hawkish right now. As in the last meeting, Jerome Powell, the chairman of the Fed, said that we will try to do we are willing to go to any level of measure if we have to tame the inflation. The main point here is inflation. If the inflation is still slowing down at a very slow speed, as the 8.8 or even 9 number would represent that the CPI inflation is showing a very slow reduction in the inflation, and the Fed would be hawkish move, and it would still continue to bring on more interest rate hikes in the market, and it is all overall bearish for the market scenario. So that's all for today, folks. If you like the video, please hit the like and subscribe to the channel. Thank you for watching. Bye bye.